Tonight is April 8th. What an just unusual world we find ourselves in right now. There's nobody alive that's been through something like this. So if it feels weird or unusual or you're not quite sure what to do, everybody in the world right now is in the same position. You know, you think about how relationships get made, and one of the big ones is shared experiences. There's going to be some really unique things that come out of this, I feel like, because we're all going through the same thing right now.
We're having shared experiences in different rooms, home alone.
Yeah, exactly.
Totally new experience.
So it's a wild time. As panelists, we had a little warm-up session this afternoon, and just hearing the different people's perspectives, I'm personally excited because I have some questions that I hope to get answered tonight. And I think this is going to provide some perspective and wisdom that those two items really make all the difference. A lot of people don't pursue, but you have to be able to step back from your current drama to look at the bigger picture.
Totally.
And you need wisdom to navigate through that. So, Gary?
Good evening. It's so awesome to be with you. We are like totally excited to have everyone with us this evening. It's going to be an amazing evening. So thanks for joining us.
All right. Hey, we've got a few things to go over here at the beginning. I'm hoping people can see my screen. I think you can. So okay, come on now. All right. As is our custom, the Elevate Investing Group and its affiliates do not provide legal investing or accounting advice. I hope I'm, and tax advice. That was behind the video. This material has been prepared for informational purposes only. You should consult your own tax, legal, investing, and accounting advisors before engaging in any transaction. The material that follows should not be construed as an offer to sell or the solicitation of an offer to buy any security. You're not soliciting any action based on this material. It is only for educational and
entertainment purposes. Sorry.
That's usually your line at the...
Yeah, sorry about this.
So this is what our meetings usually look like. We usually head down in Lancaster, Pennsylvania for an in-person meeting, which has just been incredible to build relationships. There's just something truly special about getting in a room with real live bodies. I hope everybody's in a room with bodies that you love right now at home. But we'll get back to this. Excited for some technology where we can actually still have an interaction, a connection, and share some ideas. This here is last year's 2-day summit. Dana, you see yourself in there?
Yes, sir.
Yeah, I could just spend a lot of time looking at this, seeing all the silly faces that everybody was making. I love the Godfather here. He just looks so cool. So we have another 2-day summit coming up here at the end of August. I don't expect that will be affected. We're going to be ready to give some hugs to each other and connect in person by the end of August. So we'll have some dates up there later. There's a look at our panelists. Look at that beautiful lineup. Jerry and Sue, Amos and Liz King, the Godfather, Dana Samuelson, Robert Helms, Dave Zook, April Crosley, amazing Kyle Wilson, Tim Cole, and the beautiful
and the amazing
lady,
Kristen and Michael.
Beautiful lady that I
indeed
so blessed with. Just off camera. So
this is what we were doing this afternoon. This is Michael and I erecting a barn with some of our friends.
Exactly. This is how we self-quarantine in Lancaster County. So at our live events, we have people that come up to and say, hey, how can we connect? How can we stay involved with what you guys are doing? So I'm going to go over a couple things that we do. We're going to kind of go quickly through this and get into the discussion, but want there to be resources and opportunities for people. So Elevate Investor Club, these are fully managed passive income opportunities. This is basically an email list that you can apply for. There's a process here that we'll go over here in a minute. But this is for people that are looking for a passive investment, a truly passive investment. We do public and non-public opportunities for accredited and non-accredited investors, but you must be sophisticated. And if you get involved, there's never any obligation. Jerry and I never learned the art of the hard sell, so you don't have to worry about that.
And there's no obligation for signing up to this list. We just legally need to have a pre-existing relationship in order to introduce you to our non-public opportunities. Otherwise, it's not legal for us to tell you about them.
Yeah. So that process is pretty simple. Oh, I didn't save it. Well, that's all right. You can still email Julie. She's out of the office right now, but go ahead and email Julie. We do have a feedback form at the end of the webinar here that we would ask you to take. It's like a 1-minute thing, ask you to fill out. So you indicate interest, we send you a questionnaire, and then we schedule a phone call. And just need to make sure that it's going to be a good fit for both of us. And upon that, we'll get you on the email list and let you know about opportunities. Jerry, what are we looking at here?
This is one of our days with our real estate investment mentoring club. And we took them out to one of the projects that we are building. It's a new construction, an 80-unit project in York County. And so this was one of our field trip days. What a fun day that was.
Absolutely. So if you have had success in investing and are looking to go to the next level, Jerry and I have an awesome group of just amazing people. We queued this thing up to help folks in their investing career, but you know, if we're being honest, we share our lives with these people. We love these people, and
Sure do.
that is an opportunity if folks are looking to get trained in how to syndicate, how to take your investing to the next level, legally structure opportunities for your friends and family to place money out of the stock market, get it out of that thing, and put it in some Main Street investments. So if you want to learn how to do that, or if you're a passive investor looking to take your sophistication to the next level, some of our folks are actually passive investors.
Mm-hmm.
They don't have a desire to put together and do the work of a syndication, but they wanted to see from the inside out
what a good deal looks like, how it
Exactly.
works, what they should look for, what things they should notice, what questions they should ask, and how it all works together. It makes them a better passive investor.
Yeah. By the time you see an executive summary, you don't know the 100 questions that syndicator had to ask in order to put
Exactly.
these items in there. It just looks like a finished product, but it really helps to know the behind the scenes of how these things get put together.
So if people are interested in the club, what should they do?
Well, we'll have our emails up at the end. Yeah, however you find us, let us know. We'll get you some more information. It's a conversation. It's an application. We're pretty particular with who we take just because the culture of what we have is so much more important than the scale of it. You need
Absolutely.
to surround yourself with the right people, not just a lot of people. So with that, that's our intro. We wanted to keep it brief because I am so excited for tonight. We have some amazing panelists here that are tuning in from around the country. Just by way of a little bit of intro, I'll go through here. Actually, before we do, in my quiet time this morning, we don't often do this, but I'd love to pray.
Let's do it.
Our group is not quote unquote Christian, even though Jerry and I love God more than you could probably imagine. This is not a Christian group, but at the same time, wisdom comes from God. And if anyone sees through the current circumstance to navigate for the best for your life and your family, it's going to be the creator of all. So Father, we open this meeting to you. We open every heart to your wisdom. We pray that through whatever happens here tonight, the words that are spoken, that you would give real actionable wisdom and perspective to everyone listening.
Amen.
That you would open hearts and that you would change the futures of those listening because of what they hear tonight, what they experience tonight, and let every person see more from your perspective after tonight than before. We honor you in Jesus' name.
Amen. Thank you. Appreciate that.
Absolutely. All right, without any further ado, the beautiful face on my screen is Dana Samuelson. Dana is Dana, it's just been a pleasure to get to know you. Such a kind-hearted man, so knowledgeable. Not only do I not know anyone, I have not heard of anyone with more experience in the precious metals space. Your mentorship by the gentleman's name who is responsible for bringing gold back. The name
Jim Blanchard.
I was going to say Rickard. So, yeah, Jim Blanchard. Just decades in this space. So very grateful that you're here. Dana has the American Gold Exchange and is respected around the country and beyond for being a precious metals dealer with integrity and substance. So Dana, thank you for tuning in. Honored you're here.
We're so glad to have you with us this evening.
Well, thank you. It's wonderful to be here with both of you and with your group, and thank you for the generous introduction. I love what I do. I've been doing it 40 years, and we're in a new phase of life here, so looking forward to talking about it with everyone. So thank you for having me.
Awesome. Our honor. Dana was also at our 2-day summit last year, and we're hoping he's able to get back for the next one here. Anton Matley is our next panelist. He has multi-family funding. I believe, Anton, correct me if I'm wrong, but Anton, I didn't even know your incredible background until I went and did some research on your website and things, but, born in Switzerland, got into Swiss banking, and then Hong Kong, Tokyo, New York, traveled the world seeing the financial system from all different angles, and most recently funding multifamily projects. So you're just a wealth of information in this stuff, and we're grateful that you're here.
Yeah, thank you very much. Thanks for having me.
Very happy to. Yes, sir. Last and certainly not least is Mr. Mike Ayala. Mike is a good friend, was honored to get hosted by him and his wife on a weekend a couple months ago. Awesome family people, so much depth to these folks. It goes so far beyond just the business side of things. They are pouring their lives into other people through their social media. Mike just started a podcast, which I've already listened to. I loved. I'm excited to listen to more. And he's co-leading a top 100 mobile home park company. So if you don't know what that means, it's their company is in the top 100 owners in the whole U.S. because they have mobile home communities all throughout the U.S. So Mike Ayala, thanks for being here. Welcome.
We're so
Hey,
glad.
I'm so happy to be here. Just, running through some of the talking points and listening to everybody earlier, I think we're gonna learn as much as we have to offer. So I'm just happy to be here, and thanks for the kind words.
Absolutely.
Thank you for joining us, all of you.
We have a lot of new people, so maybe we'll just give a little bit of background on ourselves. Do you want me to give one for you, or do you want to do one for yourself?
Whatever works for you. How's that? Go for it. You're wonderful.
So Jerry Horst, also known as my father-in-law, amazing man.
You can see how much we look alike. It's obvious that we're related, right?
So he and I met, is it coming up on 15 years now?
It's a while. Yeah, probably. Back
when I was in ministry. Jerry's an ordained minister, in addition to the business efforts. So we connected through ministry, and my thick-headed skull took 5 years before I noticed that his oldest daughter was
destined to be his wife.
Pretty good looking, and much more than just her looks. So, but Jerry's a successful developer builder. So for the last 40 years, he's been developing and building multifamily assets, commercial, retail, huge glass bank buildings, car dealerships, you name it, they've basically done it. So he builds the kind of assets that many people on the call, including ourselves, want to own. So through many ups and downs. So awesome perspective. And if you don't know, somebody said it the best on a webinar we did the other day. Jerry is many people's favorite philosopher. So if you haven't experienced Jerry's mindset, it is it's something to get around for sure.
Well, that's fascinating. Thank you. And Michael has an amazing history and story. And I would encourage you, I'll give you the short version tonight, but you should really look up the last Elevate Wednesday night meeting that we had, where Michael laid out his entire life, or many of the highlights of his life. And it's well worth listening to, especially if you're just getting started and would like to accumulate real estate starting from nothing. So Michael actually has done that and can tell you exactly how to do that, and can tell you all of the nuances and things that work and things that don't work. So Michael's kind of a real estate investment genius. In fact, I actually followed Michael into the real estate syndication business, which I knew only about from the other side. My side of the real estate syndication business for many years, many decades, was building product for syndicators. I always thought a syndicator was kind of like a realtor, and I never wanted to be a realtor, so I never thought much further than that. And then just as we're working with Michael together, and we've partnered on a lot of syndications and are continuing to do so. So Michael has a real depth of wisdom and genius when it comes to being creative and putting together things that don't naturally fit. Oftentimes we look at something and say, yeah, that won't work, and walk away. But that's not Michael. Michael keep looking at it and figure out a way to make it work. So it's so honored to be able to do this together.
Thank you so much.
And we're so blessed and honored to have our guest with us this evening.
Well, cool. Now that we all got warm fuzzies in our hearts, let's turn our attention to the current events. I mean, I don't know that anybody has words to encapsulate what's happening, but it's completely unprecedented. And I would love to open it to our panelists in how they, maybe just some quick comments, not diving in too deep maybe yet, but where's your head at right now? What are you seeing around you? How have you been affected personally? And what are your thoughts on this current crazy situation?
Well, I'll go first, if that's okay. I live down here in Austin, Texas, and Austin is the live music capital of the world. We have a lot of venues, and they're all closed. And I've never, ever seen a situation where, this kind of behavior has occurred in the United States, where the whole country basically closes for a month. It's never happened before, obviously. And businesses are already being impacted. There are layoffs, a lot of layoffs. There was a story of a woman trying for 3 days, all day, every day, to get through to Texas unemployment, just to go on unemployment. And it took her a week, basically, to do it, and finally going down to the Texas office to do so. So there's a lot of fiscal or financial destruction that's happening, and it's going to keep going depending on how long we have to engage in the quarantine behavior we're in now. So personally, we're just doing what we need to do, which is be socially distant, hygienically clean, and protective of ourselves. We wear masks to protect ourselves, protect you from us, actually. That's what more the masks are for, to keep from touching your face. So it's just common sense, and the more people that do it, the sooner this will pass. So that's my initial thoughts.
I appreciate it, Dana. Anton, how about you?
We are supposed to be in the Caribbean right now, meeting with my extended family from Switzerland. So we had a get-together planned there for everyone coming in from the US and from Switzerland. Obviously, that didn't work out. So we are now essentially meeting over Zoom every few days. Obviously, we have never seen anything like this, but on the other side, I think we can be really lucky in a way that this happened to us now rather than maybe 20 years ago or more, when we didn't have the internet and were able to largely work and communicate with friends and family in a way that we can do today, right? So obviously it's hard to social distance, and we have our house full, and within our house we try to social distance, but it's only technology has been extremely helpful for us to continue on the business side. As you mentioned, Michael, I'm on the financing side. We arrange financing for commercial real estate, and the big chunk of that is for multifamily properties. A lot of our clients, they have moved out of existing deals. Some of them have lost hard money, but I think even for them, it was probably the right decision to pull out of these deals and reset and see where things are going. With others, we have been trying to help wherever we can to sort out the difficulty they are in. So obviously we suffer from a business perspective because everything has come to a halt, but compared to everyone else out there, particularly all the individuals who are in the service business, we are still in a much better and comfortable situation. So I'm just grateful that I'm in the position I'm in, even though it's uncomfortable compared to everyone else who is out there who is struggling now just to find a way to get through the next few weeks and months.
Yeah. Thank you. Thanks for sharing. Mr. Ayala.
Yeah, so I'm really learning two things right now. I'm really seeing what I've done right and what I've done wrong. You know, I've always tried to keep my family first, and my family's tight, and they're all here with me, and so that's pretty awesome. We're getting along like we always have. And you know, I was on a podcast with Gene Garino actually the other day, and I've always been such a fan of him because he always talks about forced family fun and just keeping the family first. And, you know, one of mine and Kara's goals from the time we were young is to make memories over possessions. And so, you know, I've really had some time to reflect on that. You know, it's not like this is over and we're never going to travel again, but I'm just sitting here. I've been able to reflect lately and talk with the kids about all the things we've done. And so we've reflected a lot on, you know, what we've done right. Fortunately, we have a little oasis in our backyard. I got a pool here. And so that's good. We've done a lot of things right. But also, you know, just even coming from the real estate guys community, I've had my eyes opened really to no matter how much you plan or no matter how much you think you're in control or in charge of certain things, we're just not. And so a lot of us, you know, including we've had hours and hours and hours of conversations about downturns and a coming crisis. And at some point in time, there's going to be a correction. I remember having this conversation with Dana, I think 2.5 years ago. And no matter how much we thought we knew what was coming, we had no idea it was coming the way it was and how fast it was coming. And it just opens my eyes to how small I really am in the big picture and what really matters at the end of the day. So just a couple things real quick. You know, I'm invested. I did a lot of things that I thought were the right thing to do. You know, we've invested in gold and silver, which Dana will get into, and that was probably the right thing. But, you know, I've got single family investments. I've got commercial investments. I have retail investments. I have loans out that I've lent to businesses. I sold my first business in 2014 on a 10-year buyout, which was awesome until it wasn't about 3 weeks ago. So, you know, like you said, we're invested in affordable housing across the country. So, you know, all the things that we think are the right things to do, which I still think they are, and the fundamentals haven't changed. It's just, we've got to be flexible and we've got to be prepared to move. And so, you know, none of us are going to come through this unaffected. And I was listening to Anton earlier today, and the entire world's in the same boat together. And I think the best thing we can do is just, you know, just roll up our sleeves and put on our work gloves and figure out how to get through all this together. Because, you know, what Anton was saying earlier, which I won't steal his thunder, but, you know, basically the entire world has changed and we're in it together and we just got to figure it out. So that's all I'll say about that right now.
Yeah. So true. Words of wisdom. Yeah. Thank you. My wife and I had the unexpected honor of running into Mike and his wife, Kara, and their children about 3 weeks ago in Hawaii. Neither of us knew the other was there, and we just ran into each other at the airport. So it was great to see them enjoying their family wealth, which is what it really is.
We timed that perfectly, didn't we? I mean, like the day we got back, Arizona was like, you guys are locked down. Like,
yeah, same for us. Yeah.
Yeah, I had a friend in New Zealand, and he had about 8 legs of flight to get back home to the US. And on 2 of the countries that he was leaving, he was on the last flight out of that country before they closed travel down. So yeah, it's been amazing to hear the different stories of timing. I'm sure a lot of people watching there's a lot to be grateful for, just in some of those little things where, the timing can make a big difference. So we've talked a little bit about, just kind of checking in and where everybody's at. I think the $1 million question is, where is this thing going? We're looking, there's some real estate investing experts on the call, but also, Anton's perspective of the financial markets, Dana's perspective on the financial markets and the real assets of gold and silver. We never want to get too focused on, hey, how does this affect small multifamily, or how does this affect single family rentals or house flipping? Those questions are important, but there's a bigger context that we should be aware of. And that's something that I would love to kind of bring out on this call. We'll have an opportunity later to hear how each of us is reacting to the current climate and what individual steps we're taking to optimize for current events. But before we get there, big picture perspective, Dana, I've been very curious to hear from you. We talked a couple weeks ago about some of what the metals were doing. So you have the stock market going down, which, when there's a lack of confidence, then you would think the metals would go up, but that's not what happened. And you kind of explained why. I don't know if you want to start there and kind of bridge out with what's happening in your world.
Well, I'll give you the short version. I see this as a repeat, to some degree, deja vu all over again of 2009. Only it's much more compressed and it's more severe on a short-term basis, what we're going through. And the key to what's coming next is whether this is a V-shaped recovery where we go down and come back up again in a V, or we go into a U where it's longer, or we go into an L, which is not what nobody wants. It's going to last a long time. That's not what we want. As far as precious metals go, we had a big sell-off in 2008 into 2009 in a liquidity crunch when the stock market starts to really fall hard. And everybody, it seems, was timing it, and they all headed for the exit door at the same time. When that happened, there's margin calls. There's money that has to be raised to cover your bets. And gold and silver got sold off with that liquidity crunch. It happened in 2009 over about a 3-month period, and this time it happened with gold over about a 2-week period. And gold fell from $1,650 an ounce down to $1,480, and now it's back to $1,650 again. In the fastest, steepest, sharpest sell-off I've seen in the last 10 years, and the fastest, sharpest recovery too. So in the bigger picture, what's happening now is the government's responding exactly the same way. They have started spending. There's stimulus spending. There's already done a $2 trillion bill, and there's talk of another one the same size and maybe a third one. So the government's going to spend a lot of money for stimulus. That's number one. Number two, they're going to create money out of thin air, quantitative easing. Okay, so the Treasury is going to create money, and they're going to buy bonds with it to liquefy the system.
Is that the stimulus?
That's in addition to the stimulus, okay? And some people call that counterfeiting, okay? It's the creation of money out of thin air. And then what they've also done in the third leg of the playbook from 2009, which they're repeating, is they've artificially lowered interest rates all the way down to 0 in 2 big cuts. From 2.25 points, they cut a 0.5 point just naturally because we were in an economic slowdown anyway. And then when the virus hit, there was a 0.5 point cut and then a 3/4 point cut. So we're back down to 0. What that means is any investment that relies on an interest rate like a bond that pays 0 or 0.5 basis point, if inflation is 1.5 or 2%, your real yield, what you get over time, is negative. And that's what happened between 2009 and 2011 when gold went from $900 an ounce to $1,900 an ounce. And we're in the same kind of a setup now. The more money was created out of thin air, the higher the gold price went. So as the debt accumulated, the gold price climbed on the back of that debt accumulation. So it may take time, and we don't know how long how deep this is going to last. So that's an unknown. But we are also going through exploding debt through the stimulus, the QE that I just discussed, and plummeting tax revenues. So the U.S. governmental debt is about to go from 105 or 110% of gross domestic product, GDP, to 150, maybe even 200% of GDP, which is something we haven't seen since World War II, when things were still working, but we were fighting a war and there was really no revenue. So we're in a really tough situation in that we don't know how long or how deep this is going to be. The faster we can resolve this, the better for everybody. There will be some damage done, but the longer and deeper it goes, the more damages are going to be inflicted. And Anton will have better comments on the back of that, but that's what I see. And I think this is good for gold and silver as a way to preserve your wealth from a debasement of the currency and potentially an inflationary standpoint. Peter Schiff thinks this could lead to some fierce inflation. I don't know if that's the case or not, but we're on the cusp of that starting. So we'll see how it plays out.
Dana, let me ask you one more thing with that. So you talked about the debt to GDP. That's an interesting comparative, but what are some, what does that say to you? How do you interpret that? What does that mean?
Well, it means,
I understand those two numbers are out of ratio of what they should be. It's just like a person's income. Income goes to zero and they go, double their debt. That doesn't work for a person, but what does that mean for a country?
Well, if it all depends on whether the country can service the debt. Debt's really about debt service and how long you can actually pay the interest. Okay, so potentially the interest payments that we pay on our bonds, which is what those bond yields are, is interest payments, are the second largest line item on the U.S. budget now, behind military spending. Okay, now this could push them over that, meaning that for all the money the government takes in, this debt service could be larger than military spending, which has never happened before. And we have to pay our debt down. So how are we going to do that? We can debase the currency, which will make the dollar worth less, and it'll have less buying power through inflation. That's what the Fed's been trying to do for the last 10 years, is stimulate inflation so they can make the money that we owe back cheaper. It's all about having full faith and credit in what the U.S. can reasonably do. And this puts us more towards a tipping point of maybe we can and maybe we can't. Now, we've seen examples where countries have had problems already. Argentina just defaulting again for like the 11th time. Brazil's in bad shape. Venezuela, of course. Zimbabwe, everybody knows about. Anton will have a little bit better information on that from a macro perspective. But it just means that the ability to pay back our debt becomes more challenging than we've ever had before in the bigger picture as a country.
And since all of our money is basically just the good faith and credit of the U.S., if that good faith and credit starts to shake or get weaker, that may not be a positive thing.
Right. As Rick Rule, who's a mining stock genius, has said recently, if you put your money in a 10-year T-bill, you're going to get -1 to -1.5% real yield over 10 years, with the risk increasing over that time. Is that a good bet for you?
Yeah, because of inflation more than anything.
Exactly.
Or just more debt accumulation. We accumulated $4.5 trillion in debt in the last fiscal crisis, and we only paid 10% of it down before we're exploding it now. This is never going to get paid back. It's can we service it properly, I think, is the bigger picture. It's never going to be paid back.
Fascinating. No, appreciate that. Anton, are there things you want to play off there with that, or where would you like to start with what you see?
Yeah, Dana mentioned Argentina and Brazil and some of the other places. Right? They have been exposed to some of these country restructurings over the years. As Dana mentioned, some countries are notorious of restructuring their debt. The US has not done it, and all the major countries around the world in the developed world haven't done it. But we have seen already a number of cracks a number of years ago with Greece and Italy and Spain. And these countries continue to be under severe stress. They were under severe financial stress before COVID-19 invaded them. And that situation just has increased their problems. So I think what we are seeing here right now is, as Dano mentioned, it's that inflation that is happening, but it's not just in the US, it's around the world. And frankly speaking, when it comes to the US government debt, I'm more comfortable with the US government debt than with many of other governments around the world. What we also are not talking about very often are the state and local debt levels that every single state in the US and every local county and municipality have to deal with. And that is actually what I'm more concerned about, right? The United States at the federal level has the ability to print as much money as they deem fit. But when it comes to the states and when it comes to the local governments, they need to work out the situation somehow. And as we know, in a lot of states, either you have corporate taxes and income taxes, and or you have real estate taxes. And with all those income streams essentially having come to a halt, my concern is that a lot of the state and local governments will have a massive issue to deal with. And everyone right now talks about corporate bailouts and in stimulus to the individuals, but somehow also the local governments need to find a way to get their services going. And I'm not quite sure at this point how this is all going to work out, right? Mm-hmm. And this is not just a problem here in the US, it's a problem everywhere around the world, right? I'm from Switzerland. It's one of the wealthiest countries in the world, but they are having trouble too, right? So they have massive amount of stimulus they have to pump into the economy. And some of the wealthiest countries, they can handle it. But once it comes to the countries that are already in trouble, there is no way that they can handle it. So there will definitely be some form of restructuring at a country level for a number of countries, in my view. And whenever you have that stressed situation, it has an impact on the capital markets as a whole. Which brings me to the question, well, as Dano mentioned, we have treasuries that are coming down into the zero level and potentially negative. Does that help on the borrowing side? And there, my concern is, and when we look back at all these various financial crisis situations we have gone through over time, at least over a shorter term, and I'm talking about a year to 2 years, generally the markets are not responding with lower borrowing interest rates to the consumer and to the corporate world just because the governments are lowering their rates. And the last example where we have seen that really was in 2008 to 2010, when the federal government obviously lowered the rates too, but the borrowing costs didn't go down for corporates and consumers to the same extent. Yes, they had lower rates, but the spread on the over the so-called risk-free rates still increased. And what also no one is talking about, even if the interest rate is relatively low, the problem that we have seen back in 2008, 9, and 10, and we are seeing already now, is that yes, you may get still attractive interest rates, but the the qualifications for a borrower to qualify for a certain loan, whether it's an individual, whether it's a company, or whether it's a piece of real estate, gets tougher. So as we have already seen on the real estate side, leverage tends to come down, debt service coverage or debt yield, whatever the measuring stick is going to increase. And reserves are being added, whether it's for principal and interest, insurance, taxes. So lenders, even if interest rates are low, this only will come in with some solutions that creates more of a cushion for them. And as a result, at least in the short term, in my view, and short term, I'm talking about 1 year to potentially 2 years, where we will have tighter lending environment with potentially rates that are similar to where we already saw them pre-COVID, but it's only a much tighter underwriting standards, which in my view then also will result in a situation where as a buyer, you have to raise more equity, which means that you have to, in order to generate a return for your investors, who also turning more risk averse, in order to generate a decent return from them that is acceptable to them, you will have to pay a lower price. So that's why I think even though interest rates come down, I think at least in the 1 year time frame to potentially 2 years, I personally see more of a pressure upwards on cap rates, despite the interest rates coming down.
So I'm just going to summarize a little bit because I know some of our folks may not have followed all of that. That was yeah, I love the breakdown there. Let me just give a little bit of a clarification for people, say it in maybe some different words. So Anton, correct me if I'm wrong, but when you say restructuring of nations' debt, that's a nice way to say these folks are defaulting. You know, this is when an individual can't meet its obligations and goes to bankruptcy court. It's basically, you're saying this is a nice way to say that these countries, you know, restructure doesn't sound that bad, but that means that, you know, there's some serious issues going on.
That's correct. Yes. So as holders of these debts, everyone comes together to the table, and you essentially negotiate how these outstanding debts can be restructured so that the debtor can continue to move on, right? So similar, essentially, rather than going into a foreclosure, which obviously you cannot do with a country, you sit at the table and you come up with a plan that outlines how, with new financing, so you as a creditor, you take essentially a cut of your existing outstanding loans that you have in your portfolio, and you restructure it or package it into a new loan that hopefully will then allow that debtor to repay that loan over the next 5 to 10 to 20, 30 years, right? So it's really similar to, I would say maybe debtor in possession financing for a corporation, right, where everyone comes to the table and essentially every creditor has to agree what the cut should be.
Yeah, and the sophisticated folks on the call, I think, are following all that. Just for some of the guys maybe just getting started, the next part you talked about was, you know, people are probably hearing negative interest rates. They see the news, oh, the Fed's, you know, in an emergency move, slashed the rates on a Sunday afternoon. It's like, what's going on here? But that does not translate then to a lower rate on the mortgage. So you're saying that the interest rate is coming down that the banks have access to, but they are perceiving more risk in the economy and want to be paid for that risk. So even though the interest rate is coming down, what we can, as consumers, borrow capital for is going to stay the same as what you're saying, because, you know, where the banks were comfortable with, let's just say a 2% margin, Now they want a 3% or 3.5% or 4% margin. So, and the other thing is they're going to be more picky on the loans that they take and the borrowers that they take. They might lower the loan to value. So instead of 80% on a purchase or a cash out, it might be 75%. And you talked about reserves on some of these deals. Lenders are saying, hey, we know times are tough. We're still going to do this deal, but at closing, we're going to keep 12 months of our mortgage payments and put it in this account over here so that we know we're covered. So reserves are going up, buyer qualification standards could be going up. So that's kind of how that translates to the effect on everyday Main Street investors.
Yep, that's right. Yes, and obviously, when it comes to that reserve requirement, as some of you have heard, right? Fannie and Freddie, they have offered forbearance on the multifamily loans. They do not really want to go through that again down the road, whatever the situation might be. And how can you avoid this if you put enough principal and interest and taxes and insurance into an escrow account? If a situation would happen as we see it today, then they would be able to pull any deficit out of that escrow, right? And that's essentially the purpose behind it.
Yeah, no, it makes sense. Thanks for sharing all of that.
Yeah, thank you.
Mr. Ayala, what's
Hey.
up? My brother.
Doing good. So I think that the reason why, and I love having conversations with people like Anton, because it really gives us, we're looking out there. Anton was talking earlier about, a year down the road, 2 years down the road, and us trying to really understand where this is all going and what it looks like. And so what I've really been focusing on recently and bringing it back to, the individuals, the operators, the investors, what can we currently do in order to really make the right moves right now? I think we have to try to get our minds around what Anton's talking about, what Dana's talking about, Michael, what you just summarized. Try to get out there, 6 months down the road, 12 months down the road, 3 years down the road. What's this going to look like in order to make the right decisions today? Because in a time like this, I had a mentor of mine the other day say, we have to be really careful because in times of surgery, there's times where you cut the fat and then sometimes we get into muscle. And when we start getting into that muscle, we have to be careful because there has to be rehabilitation there. But once we start getting into bones, whether this is your individual finances or as an operator or a business owner or investors, we have to start being careful there. And so I think the important thing to really get our mind around what Anton and Dana are talking about and the long-term effects of this is to try to really position ourselves and see what we need to do in our own lives and our personal portfolios. Because what we don't want to do is overreact. We've had to lay off a lot of amazing employees. We worked really hard to build these teams. And, when you get into times like this, we want to be careful that we don't get into the bone, but at the same time, we've got to make sure that we can make it long enough. And so having conversations like this is extremely important because nobody has a crystal ball. We don't know exactly where it's going to end or when it's going to end, but trying to wrap our minds around, what we can do with our debt service, what we can do with, not getting paid by residents. Everything's fine this month. I mean, our collections are 1% off for this month, but it's April and it's still early, right? And so I'm looking forward into May and June. And I think sometimes we have to put ourselves in positions of, as individuals, what are we doing? And then you have to just assume that everybody's doing the same thing. So as individuals, we're looking at we built this mantra within our company early. It was literally the week I got back from Hawaii, Jerry. We just came up with a 3-part thing that we could just really summarize with our team. And it came down to this: protect the residents, protect the team, and protect the assets. It's such a complex matter and we don't want to overreact. And so we have to start making these changes, but we've got to do it in a quick manner too. And all business owners, there's going to be so many businesses that never even come back from this. There's going to be properties that never come back from this. And so what we've started to do is really look at, again, even with laying off employees, you have to be careful that you don't lay off so many employees that you can't collect rents. We're in 13 different states. And even if it's in your backyard, you still have to put financials out because banks want to see financials, right? And the good news is everybody's in this together right now. And so I think, there's a lot of fundamental things that we can talk about, like communication and community and just getting on the front end of, conversations. But I think it all comes back to that simple little mantra that we've been talking about: protect the residents, protect the team, protect the asset. And I'm interested, we probably won't get into it right now, but I'm interested to really get into the protecting the asset conversation at some point in time, because as investors, as business owners, even in our personal lives, we've built these assets and we've got to figure out how to best protect that. And in order to really do that, we've got to get our mind around what Anton and Dana are really talking about. Where's this thing really going? And again, I know nobody has a crystal ball, but when you've got someone like Anton on a call who's been through this multiple times, he's been in international banking, he's seen this happen, he's been through restructurings. The best thing we can do is what you just did, Michael. Try to decompress this to something that we can digest and say, okay, if that happens and we're 3 years down the road and this is where we're really at, how do I work that backwards? How do I begin with the end in mind and then bring that back to where I'm currently at? And so to me, it's breaking that down, individuals, operators / business owners, and then investors. And how do we do what's in the best interest of all of those together? And that's what we're really working on right now. And I'll just say one other thing. As entrepreneurs, as business owners, as investors, we're inherently optimists. I don't really think that right now, while we need to stay optimistic and we need to keep our peace and we need to not run off the train tracks, not get too far into that bone, I don't think right now is really the time to be too optimistic. And this is why I love having these conversations, because as an entrepreneur, as a business owner, I want to solve big problems. And the sooner I can identify, if I can get down the road to where Anton's at and say, okay, 3 years down the road, this is what it's going to look like, and I work it backwards, now we can start talking about solving bigger problems. But I think the thing we need to be really cautious of right now is that I've been asked this so many times in the last few weeks, like, what should I invest in right now? And I'm like, almost nothing. Like, call Dana Samuelson. But outside of that, like, I don't think that right now is a good time to invest in almost anything unless you're an expert in that arena. And so just one more thing, and then I'll wrap it up with this. I think right now is the time to be a little bit conservative, preserve cash, and just really, I would much rather assume that this is going to be a 3-month problem. And obviously it's a much longer problem because of the fallout, but just even as operators, as real estate investors, as business owners, we need to go out to, I literally was having a conversation with a community that I'm in the other day. Let's go out to December and let's just pretend for a minute that we're quarantined till December. I know it's a horrible conversation, but that's kind of like worst case scenario. And so then let's work this backwards. Like, what would that look like? And then once we get our mind around this, this is how I've been looking at this. The rules have changed completely, and they changed overnight. None of us saw that coming. It happened in a way, while Dana and the smart people that we talked to, we've known that there was going to be some kind of correction. We know we can't keep this level of spending and debt accumulation up. We knew it couldn't happen forever. The stock market can't go to 100,000 overnight. The rules completely changed. So this is how I've been thinking about this. There's 5 stages of grief when somebody dies in your life. And the world that we knew 3 weeks ago, 5 weeks ago, it died. It's dead. So I've been looking at this through a process of grief, and I've been watching it. I've literally been on calls where, 3 weeks ago, the entire community was just like, this is not happening. I can't believe this, and it's going to destroy me. And then, so the stages of grief are denial, anger, bargaining, depression, and acceptance, right? And so just coming down and centering ourselves, I think, is extremely important at this point in time, because this is a very emotional time. Stress will probably kill more people than the coronavirus has ever thought about killing. Bankruptcy is going to cause more people to go off the train tracks than the coronavirus will probably ever think about killing. And so I think we just need to recenter ourselves. We need to find community, and we need to just do whatever we can. There's a lot of things that are out of our control right now. And, some of those governments and the things, the restructuring and all that stuff that's going to happen, there's not a whole lot we can do about that. But what we can do is hunker down, focus on the things that we can control. In our case, it's protect the residents, the teams, and the assets, and keep our health, keep our center, because the worst thing you could do is get on the other side of this. There's a scripture in the Bible, and not to bring that up, but what does it profit a man to gain the whole world but lose his soul? And it's the same thing here. Like, we've all worked our tails off. We've worked so hard getting our portfolios in place and everything else. And that's, we're either going to get through that or we're not. And keeping our heads clear is extremely important. But what we don't want to do is lose our families, lose ourselves, lose our health, lose our sanity, lose our communities. So I would just encourage everybody to just recenter and take what Anton, Dana, Michael, what everybody's talking about, get out there, 6 months, 12 months, 3 years down the road, and then just work that backwards and figure out what you can do today, because we need to move quick and we just need to fortify our positions, whatever that looks like.
Yep. No, I agree 100%. Jerry, do you have comments here?
I really appreciate everything you said, especially about just being rooted and grounded and knowing who you are and knowing what matters. I think that's an interesting, to me, I always stand back and look at these things. Yes, there's the technological side, there's the what's happening side, but the bigger piece that none of us can really very well anticipate is the psychological side. For one thing, people are going to discover that they like working at home, or some people will discover that they don't. But consequently, people who thought they needed to go to the office, they're going to find out they actually didn't need to do that. I told some friends the other day that the fax machine actually existed for 10 years before anyone knew they needed one. Because after all, why would you need a fax machine? Who needs one of those anyway? But they became needed when the post office in the UK went on strike for a while. And so everybody went out and bought fax machines. Now, of course, nobody even uses them. That's yesterday's. I get that. That's okay. I'm an old guy, so I'm talking about fax machines. But I'm just saying, such a thing is happening right now that's going to have a psychological impact that I think is going to have a bigger impact than the financial impact. And by that, I simply mean everyone's behavior is going to change. The world is never going to go back to the way it was. It's a different place. And I think your analogy of death is great, Mike. Thanks for sharing that. That's awesome. And to me, I think one of the biggest things is, what are we going to do with ourselves during this time? We do need to protect our assets. And I hear what you're saying about moving quickly. The problem is we don't actually know how to move. And it seems like the most natural response is to hoard at this point in time because we're afraid and we don't know what's going to happen next. Incidentally, that whole afraid thing doesn't make us more intelligent. That normally makes us less intelligent. Mm-hmm. And so people don't usually act out of wisdom or intelligence when they're afraid. Just yesterday, I was curious. I remember that the Bible said, "Fear not" a few times. And so I just thought, I wonder how many times it actually says that. Anybody care to guess? Let's just pick a wild number. Just guess. I mean, of course, it's all over the place in every different version, but it centers around 2,500 times. That's kind of a big deal. And so just onto what you were saying, Mike, I think the most important thing, asset protection is very, very important. But there's something even more important than that. And that's protecting our own psyche, our own spirits, our hearts, and our ability to not be afraid. Because when you are afraid, you're not thinking intelligently, you're not creating, you're hoarding, you're reacting, waiting to see what's happening. And sometimes that may serve part of you, but it's not going to make you into a stronger, bigger person. I think one thing's for sure, two things are for sure. Actually, about 1 million things are for sure, but I'm only going to mention 2 of them. And one of them is we are going to come out of this. And 2, when we do, things will either be better, they'll be the same, or they'll be worse. That's a pretty sure thing. Wouldn't you agree? Yeah. On the other hand, ourselves are going to come out of this thing. And we ourselves have the opportunity to be better, the same, or be worse. And I hear a lot of people talking about how we're going to gain 10 or 20 pounds during this time. Well, that's a choice that each of us makes. But many people being quarantined have the opportunity to read, to learn, to study, to become stronger, to become better, and to come out of this prepared to engage a new world where all the rules actually have changed. And they actually have. So those are my thoughts as a tag on to what you were saying, Mike. I really appreciate that. Thank you. The old world has died, and we need to work through this quickly. But in the process of working through it, we need to become the best people that we can be so that we're prepared for whatever the next world looks like, because it's clear that none of us actually know.
Yeah, no, I personally agree 100%. There's a stat that I saw that for every 1% of that unemployment goes up, 40,000 people in the U.S. die. So either the U.S. or the world, I think it's the U.S. So if you look at unemployment going to 20, 25, 30%, that impact on the lives could be a whole lot more than this COVID virus. So I'm in complete agreement. There's the financial aspect, and we're going to dive into that some more here. The emotional aspect is the more important deal here for each one of us. We can't handle the financial aspect with as much wisdom if we don't deal with the psychological and the emotional aspect. So it's critical. One thing that I learned from Jerry is don't watch the news, read the news. That was a key that he shared with me a while ago. When you watch it, it hijacks your emotions. It goes straight into your emotions and turns those things on because they are experts at it.
And most of us don't realize, we'd like to think, especially as men, we think we're so incredibly intellectual, and it makes us feel strong and powerful because we figured it out and we added 2 and 2 together and came up with 4, and that's how life works. But that's not how life works. That's not how we work. And the worst thing is we don't even understand how we ourselves work. And the thing about what we see, what comes in through the eye gate, actually instantly programs our emotion and gives us thoughts to make those emotions okay to be acted on. That basically means we're in a runaway roller coaster, and that's not where we want to be in our lives. Reading the news gives us an opportunity to process things at a lower, reduced emotional level, where we have at least an opportunity to translate those words into intellectual thoughts rather than just having our whole emotional programming being hijacked.
So that's huge, because you have to protect your own emotional state. If you are not resourceful, you've just handed over your greatest source of power for your future, for your family, for your success, by letting yourself be hijacked into an anxious state, which can't help anything and actually damages. So being a positive person or optimistic, it's not about a denial. It's not saying, hey, this stuff is not going on. We're going to be back to work on Monday. That's not what it's about, but it is finding the medium. You know, some people are hearing the current events, and like Mike said, they're going into denial. They're, you know, going down to Florida for spring break, and, you know, they're just pretending like everything's fine. And then you have people that are complete, full of fear, you know, can't even hug the kid, you know, well, I guess you can't hug the kids, whatever. You know, you go to the grocery store and, you know, people are acting weird. So I just put my hands up and wiggle around them because they're so afraid that there's another person there trying to get some food for the family. So it's not denying any one of those things. It's responding with wisdom for what the situation calls for. So like Mike said, as far as moving quickly, you know, and I'd like to get into some of what each of us are doing. How are we taking these big picture concepts and translating that into our individual life, our business, and how we are restructuring? You know, I'll be very frank. I have not been through a downturn yet. You know, to have started buying real estate 7 years ago, it's a whole lot easier to look like a genius than having started 15 years ago and taken some lumps in 2008, 2009. So my focus for the last probably 18 months in conversation with my wife is my goal right now is not to explode my wealth or like get super wealthy. My goal right now is to make it through the next downturn. That's my goal. I'm going to ask as many people who have been up and down those roller coasters as I can. I'm going to learn as many lessons from other people's lives as I can. And so when this whole thing started, we made some changes real quick, and I didn't want to overreact, but I sure didn't want to underreact. You know, some of the guys are saying that this could go out a few years. Personally, I don't think that it will take that long to get back to a healthy place. I think maybe a year or less. I think we're going to be in this quarantine for, you know, I don't see it happening for a long time more. Maybe if we're still here in 2 months, I'd be shocked personally. But that doesn't mean that that's how I'm going to plan. I'm going to plan that this thing is going to take a long time, because say it takes 2 years, say it takes 24 months. If I screw around for 6 months, telling myself everything's going to be fine, only to find out that I came up 3 months short on the other side of this from making it, and I'm one of those that went down in 2008, 9, and 10 because I was a few months short. There was a lot of those people that if they could have just held on for a couple more months, they would have made it through. I don't want that to be us. So we made some changes real quick, got optimized. So maybe I'll kick it off here with a couple things that we did that those watching, I'd encourage you to consider. First of all, we called all our banks. We said, hey, we take pride that we've never missed a single payment on anything, anytime, but we're also looking for ways that we can optimize and structure conservatively. So, you know, part of it is we had a few refinances that were in process. So they're like, well, you can go interest only, but then we're not going to refinance anything for you. It's like, well, we'll pay the principal. So with some of the banks, we're making full payments. None of our banks offered forbearance or like no payments. And these are small local, either regional banks or credit unions. So many of them offered interest only. I think we did that with one bank that we were refinancing away from. Hopefully none of those bankers are watching right now. But again, it wasn't like we needed it, but I didn't want to find out in 27 months that I needed it. I'll be pretty vulnerable here. We have an amazing employee that we have just fallen in love with the last year. She's been an incredible Julie, the backbone of these meetings. And again, this was really hard for my wife and I, but we said, hey, there's an opportunity right now for her to be taken care of on unemployment. So we sat down and we said, hey, Julie, you are, and this is my assistant. She helps so much. Amazing lady. We said, hey, we're family. We're going to help you through this no matter what it takes. So if you can go on unemployment, and because I look at it like we're getting help from the government. You're our responsibility. We're going to take care of you, your family. So we're seeing the government help by paying you part of your wage through unemployment. So we think that that would probably be the best thing to do because we're conserving cash. But that's the prudent thing to do. See, you can have the same action and have two different motives. You can do something out of anxious fear that looks the same as somebody doing, you know what, this is just a prudent move. Restructure, get conservative, and conserve cash. So those are a few things that we're doing. Mm-hmm. I'd love to hear, just kind of, that was a little personal. You don't all have to go that far, but would love to hear from each of you. How are you taking the big picture concepts that you understand and applying that to your personal investing strategy, your investment positions, yourself, your business? Dana, do you want to start on that one?
Well, my life is pretty simple. We have our precious metals business, and we actually do fairly well in a situation like this. We're counter-cyclical. So, we had a couple lean years the last 2 or 3 years while the economy was doing good and the stock market is doing good. And now I think that's going to change for us. So it's my life for 40 years. I think Mike is right and Michael is right that you both touched on now is the time to be conservative. It's really time to be conservative because we don't know how long or how deep. So that's number one as far as a proper plan. It's also a good time to take stock since we have a quieter time and to set goals for what you want to see a year or two from now, as Mike said as well. And, I've been watching this since it popped up in China. My wife, I call her the pandemic princess, my pandemic princess, who's become my quarantine queen because she's fascinated by this. She's studied pandemics her entire life, and now we've got one. So we've been prepared way ahead of the curve compared to what most people have gone through. But that's just, personal. I think what you need to do is just be very conservative because we don't know how long or deep, as I said. There's a couple things that I've seen that really make a lot of sense to me as to how we'll know when we're coming out of this. And it's all about the virus and testing. We don't have enough testing yet. So when there's enough testing and we can actually see results quickly where it is and how bad it is. That's number one. Then we can start to control it. We also have to be able to track or trace infected people to go down the line, the chain. We have to be able to do that effectively to help to contain it. And we also have to keep the curve down, which is to prevent the hospital system from being overloaded. So when those three things come together, testing, tracing, and the hospital's ability to handle this are all much better, then we'll have a situation, then we'll know we're starting to come out of this, right? And we have the same thing now on the internet and on nightly news with, infection counts and death counts that we had with the debt clock back in 2009 and 10 and 11. I mean, they're trying to track it and give us a sensational number. So that's why I think you're right, Jerry. Read the news. Don't watch the news. Assimilate it for yourself. And there's going to be some very good opportunities on the backside of this. There's going to be distress sellers. There is going to be fire sales. And you want to position yourself to take advantage of that when that time comes. Not that you want to take advantage of somebody else's hardship, but that's just the reality of the marketplace. And I think that there will be some really good opportunities, but we've got to, like you said, Michael, we've got to get through this. So you have to be very careful on the front side, especially, and we're still way on the front side of this. I personally think this is going to be a 3 to 6 month process with a couple different waves, and there will be a vaccine. We're going to figure it out. That's going to happen, but that may not be for 6 months or a year. And we don't know if it'll mutate or not, which is another possibility that could give us a second surge of this. We'll see. But I would just be very conservative, be very grounded, be very cautious in how I move forward, and then think about what I want to do to position myself for the next step when we come out of it. And that's really how you can do the best for yourself and your family, I think.
That's good advice. Awesome. Anton, do you want to go next?
Sure. A lot of people talk about that we will enter a strong V, right? So right now we have the second quarter that will be a complete disaster, even in the best scenario. And a lot of investors and gurus and pundits out there believe that it will be a V recovery. I do, even if we are back to so-called normal within 2 months or 3 months, I just do not see that is going to happen. And Mike and Michael and Jerry, you have touched on this, which is the psychology. And the psychology is not just the consumer and us as individuals, but it's also the businesses. And the business decisions are made. Obviously, financial decisions have to be made, and they're in a way the easiest, right? You know what you're able to do and what you're not able to do at any given moment. However, what you do not know is what the future holds. And as long as you are not really sure what the future holds, you will hold back in your spending, and I just do not see any way. And when I look at all the other financial downturns I have gone through in the US as well as worldwide, it just takes longer for the economy to bounce back. And there is no doubt that we will have a strong uptick in the GDP because we have such a severe downturn. So solely that V is going to happen. I just do not see that V is going straight back up where the two top ends close out each other. I see that V will stop somewhere on the way up, and then it will likely be turning into an L going further out. So I personally feel that it's wiser to prepare for that fast upwards to have, and then that long drawn L of recovery. and make it through that than just hope for that strong V and run out of money, right? I think Mike and Michael, you talked about that, because that's the biggest risk that you potentially have, that on a personal level or business level, that one runs out of money to really take advantage of what the recovery brings to the table. And there is no doubt that there will be opportunities, right? Every downturn brings opportunities. You will have businesses that fail, and that creates obviously opportunities, whether it's ethically right or not, doesn't really matter. The reality is it is going to happen. And all what we can do as individuals to ensure that we are not the ones that lose everything, but that we can survive to take advantage of whatever is presented to us down the road. And specifically when it comes to commercial real estate, right, in my view, it depends a lot in what space you're in. Mike, obviously he is exposed to a lot of different type of commercial real estate, and the various asset classes that he owns will perform very differently over the next 6 to 12 months and maybe years. And obviously he has to adapt to each of those situations very differently, right? When it comes to the multifamily side, I think what my concern is really with particularly sponsors in the private middle market space of 2 million, 3 million properties to maybe $40 million properties, particularly also syndicators who get that sense, so it's a V and we will be back to normal very quickly. I think that is something that we can all hope for, but we should really prepare for that much slower recovery and run numbers to see whether we can make that recovery if that strong V is not going to happen. And you, Michael, you have talked about forbearance, right? Your local banks, they have not offered forbearance. I know some of them, I'm not aware of any local bank offering forbearance, but sometimes they offer loan modifications. Whatever it is, whatever the offer is, my recommendation is make sure that you understand what the consequences are of what is being offered, right? Because the forbearance, when we specifically talk about Fannie and Freddie, that forbearance is for right now, at least for 90 days, and then you have to pay it back within 12 months. Well, what does that mean? 3 months out, one has to have the ability to pay a higher amount every single month until that forbearance is paid back. Some of the borrowers also then face the end of the interest-only period on top of having to pay the forbearance. So my recommendation is do not just hope for that strong V, but really run the numbers as a worst case and decide based on your cash position that you have in your business, in your property, as well as you personally as a sponsor, whether you can live with what you have right now and take the risk of a forbearance, or whether you have to consider to do a capital call today with and have that discussion with your investors today when you are not against the wall, rather than just kicking the can down the road based on hope. And if it doesn't work out as what you hope for, your situation will be so much worse if you have to go to the investors 6 months or 12 months down the road with a capital call than just facing them with the reality today and say, look, we are a little bit tight as it was before COVID, so I think it's the right approach to inject more equity, right? And that's really applies even if you're not syndicating. It's worthwhile to have that discussion with you personally and within each of your businesses to see whether you can survive. And if you cannot survive, what are your credit lines? What are your cash positions? And are these sufficient for that worst case scenario, right? And that again brings me back to that, how can you survive? And cash is really king, right? And that also applies to real estate ownership, including syndicators. We have had the discussion earlier with Mike, right, where obviously as a syndicator, the last thing you want is to go to your investors with a capital call, right? And I understand that you fear that reputation loss, but I think it's better to face that situation today in a truthful manner rather than just hoping for the best.
Yeah, no, it's looking at all the options, and that's part of creative problem solving. You need to know your options to know how to navigate through the best way.
Mhm.
So sticking your head in the sand or twiddling your thumbs for 4 months is not the strategy right now. It's figure out your options. So I couldn't agree more. Mr. Ayala, love to hear.
Yes. Anton, I appreciate, you know, just your perspective, because again, not putting our heads in the sand. I think the best thing to do is to just really take a perspective like that, or even just getting back to the economy and what Dana's saying. It really allows us to just really accept that. And that goes back to the 5 stages of grief. I mean, if we just get to the point where we realize that yesterday's plan is dead, it died, and get to the acceptance part and get around people like Anton that are telling us what he really believes is coming. It doesn't have to be spot on. It doesn't have to be exactly right, but some version of that is coming. And by the way, Anton, I think you're probably pretty spot on. Doesn't matter what I think, but if I can get my brain around that, then I can work backwards and I can accept that. We can get past the fact that that old plan was dead. We were on a huge acquisition strategy this year. We had developed a team built around an acquisition strategy. We've worked really hard around, you know, putting that team together. And then, you know, Michael, I appreciate your transparency, but you get into a time like this and we really have to, this is what I was really talking about cutting into the bone. We took our team, you know, unfortunately we had to go pretty deep into our team because we're not on the same, I'm not sticking my head in the sand, and I don't believe that there's going to be a lot of acquisitions this year. And even if we come out the other side of this, you know, whatever that timeline is, I don't even know what the timeline is that we're going to be able to analyze deals properly. So again, it's not the time to be sticking our head in the sand and ignoring this. And so a couple things, from where I sit, wherever this ends, I think the fundamentals for affordable housing, they haven't changed. And so, you know, we're bullish on the manufactured housing space. It's just, again, it's timing. I'm not really paying much attention to that right now. What we're looking at is how do we, I was talking about this earlier before the call, but we've basically taken assets, and I would encourage anybody to do this, whether it's in your personal life or whether it's in your investing life or you're a business owner or an operator, kind of divide things into A's, B's, and C's. And if we can go out 2 years or whatever that timeline is, and then bring that backwards, we have certain classes of properties or investments or divisions of our business, or even in our personal life, there's certain expenses that we could even just take it into the personal arena. It's the simplest way to do it. But if you can get out there and you can just accept the fact that I'm not in this situation, but if you think your job's not going to be back for 6 months because you work at a movie theater, accept that worst case scenario and then work it backwards and put your expenditures into an A, B, and C category. There's certain things that you need to try to hold on to. I mean, Maslow's hierarchy of needs is more important now than ever. What's the fundamental needs? What do we really need? And that's your house, right? You need a place to live, but we don't need flashy cars. We don't need all that stuff. So you can take that same concept and you can roll it into the business arena. So what we really started looking at is our A properties, our B properties, and our C properties. And the A properties are probably going to weather the storm with or without any additional capital injection. There may be some challenges on distributions because we need to protect the asset. That's what I said to begin with: protect the residents, protect the team, protect the asset. So there's some properties that they're going to weather a storm as long as we don't get, 60%, 50% collections problems. But even within that, you might have some properties that would make it through that because they don't have a lot of debt. They don't need a lot of capital. So this is kind of how we're looking at it. We've got our A properties, and then our B properties are like, okay, if we get down to 70%, they're probably going to be fine. There's going to be no distributions potentially. but we have some capital expenditure issues. We were planning on bringing in homes. A big part of our model, we don't necessarily need to raise all the capital up front in order to turn a community around, because we've got financing on, the mobile homes and different avenues to really bring homes in over time. I don't know what that looks like on the other side of this. I don't know. We were on a phone call the other day we have 3 different lenders that basically help us backfill our homes or our communities with homes. We don't know what they're looking like on the backside of this. We don't know if we're going to be able to bring in homes. So we have to get real on that conversation and say, okay, our business model might change a little bit, because a big part of our growth strategy was bringing in homes for manufactured housing. So those are the B categories. And then you've got your C categories of assets that, you literally could have a property potentially. We don't have a situation like this, but if you have a property that you bought in the last 6 months, and a big part of that was, raising capital over the next 3 years, or you had a big capital expenditure to go in and remodel and raise the rents, you had to jack rents. And it doesn't matter if this is multifamily or any of it. Those are the C categories in my mind. And I think every operator is probably thinking about this, but I would encourage you to take Anton's stance and say, okay, let's go out to worst case scenario. Let's really see what this actually looks like. It's stress testing, right? What's it going to look like if we can't get capital? I'll bring it into perspective for me. If I can't get capital in the next 6 months to bring homes into communities, what does this community look like with the current debt service, not being able to raise any additional capital? What are we going to do with that? And what I loved about Anton's approach is let's get ahead of it early. Like, let's just accept where we think we're going. And if we communicate it early and we get out ahead of it and we're wrong, then what happened? Well, what we're fearful of, and this is what Anton said, and this is human nature, we don't want to lose investor confidence. We don't want to lose partner confidence. We don't want to lose confidence with our spouse or anybody that we need to communicate this with. But the reality is, outside of that, communicating bad news early, this is what Kenny McElroy said. I mean, this will never leave me. It doesn't matter if it's good news or bad news, communicate it early, right? And so I think there's never been a better time. And Anton, I appreciate the wisdom in this. Like, we just need to get ahead of it. We need to accept it, and we just need to communicate it. And if we're wrong, I believe that we'll all be better because we communicated it. We set the expectation up front, and then we move through it. And I will tell you, this is one area where we did drag our heels a little bit. I saw a lot of operators come out right out the gate. And I asked Anton this earlier, what he was seeing, but I saw a lot of operators come right out the gate and say, hey, we're suspending distributions. Don't expect distributions through this time. And I think that's the right thing to do, because you got to protect the asset. And I think every investor would appreciate you saying that out the gate, as long as you're doing it in the interest of protecting the asset. So we did not communicate that early, and we're working through that because we're taking ours into the A's, B's, and C's. And rather than just taking a blanket approach, we said, okay, we have our A properties and maybe we don't need to do that yet. But I think just listening to Anton, it would have been better to just come out the gate and say, hey, we're going to suspend distributions. And then if we don't need to, we'll talk about it. And so I just love the straightforward approach. And again, for me, the fundamentals of affordable housing are there. In fact, I think the need for affordable housing is going to increase. And so, we're optimistic on the other side of it. We've just got some problems to solve because the capital is not going to be as easy. There is going to be a lot of good deals out there, I think, in the manufactured housing arena, but financing was tough for manufactured housing before, so it's going to get even more difficult. So, Anton brought up being able to come in all equity. Well, that only works within certain margins and certain investor expectations. And I have a feeling after this, investor expectations are probably going to soften a little bit because, returns are not going to be what has been promised, and whether people have been hitting that or not, I don't know the answer across the board, but just setting realistic expectations. On a personal level, I'm not completely in manufactured housing on a personal level. I mentioned this before. A lot of the single family, a lot of the commercial that I have, that's my personal portfolio. And I think we're going to take a pretty hard hit there. And in the interests of, just being completely honest, as Michael was, we're just adjusting right out the gate. Karen and I adjusted early. The good news about not being able to travel or go out is nobody's spending money, right? And so we quickly adjusted and did the same thing in our personal lives. We called the banks and we said, hey, what do you guys fortunately our residents are paying at this point in time, but I'm expecting that to slow down a little bit. And again, we're all in it together. So I kind of think that, as a landlord, I understand what people are going through, because as a tenant, I understand what people are going through. Our company leases a commercial building, right? And the first thing we did, so Jerry, the week that we were actually in Hawaii, our team left the office. They went home. I'm like, let's get ahead of this. So we haven't been in our office for 4 weeks. You know, as a tenant, I understand that I'm going to have challenges paying my rent. So immediately I put on my landlord hat, and I understand that my tenants are going to have challenges paying rent. So we started seeing this early. And I think the best thing, just from, you know, the human perspective, we're all in it together. Communicate early and often, good news or bad news, it doesn't matter. Just communicate, and let's just try to pull together and help each other out. I literally got a letter from a tenant today, because all the mail's coming to a post office box right by my house. And so I'm the mail collector now. But literally just reading the letters from the tenants, you know, my heart's starting to break for people. But we just got to remember we're all in it together. And if we can go out there to that period of time and figure out what the worst case scenario is, we can work it backwards and we can live through it.
Those are words of wisdom. Thanks, Mike. Really appreciate that.
Appreciate that, Mike. As far as resources, now I didn't communicate taking questions. We're, wow, bumping our head. We're past 8:30, which is a little bit of what we had targeted for closing. Jerry, do we have?
Oh, let's do some questions.
Do some questions. Okay. One thing for a resource, you know, there is a ton of money getting pumped into the economy through unemployment for the lower level tenants. There's also help for small businesses. So I recently did a webinar that focused on 2 of them that are great for small businesses. It's the PPP, Paycheck Protection Program, and the EIDL loan, which is the Economic Injury Disaster Loan. So I don't think we have time to cover that now, but those are 2 programs that I've used to come through this. You know, it's one thing to survive. It's another thing to stay strong and stay ready for the opportunities that come.
Yes, it is.
So with that, I'm gonna share ask some questions that have been submitted. If people have some, you can go ahead and ask them in the Q&A section at the bottom. I don't know that we'll get to all of them. I don't expect we will. But here's a question for Jerry. As a developer, if you have a project that is shovel ready, what are the cautionary measures you take in light of the uncertain times ahead? So we've talked about how this affects some of the other asset classes. What about development?
Yeah, so far we're still moving ahead with everything. We're looking a lot closer at it and making sure that we're not missing anything. We're constantly reevaluating the market. We're reevaluating the debt side, staying in communication with all of our debt providers and all of our investors. But so far we haven't taken anything off the board that we were planning to. We're not as actively pursuing new stuff, but we're still moving ahead with what we have.
And these projects are multiple years out. So
They are, yeah.
It's a different time horizon.
Yeah, and so like Michael's saying, a lot of the projects we work on, we're literally 5 to 10 years in planning before we put a shovel in the ground. But the question was for ones that are shovel ready. We do have a few that are shovel ready that we're still inching forward on with our eyes wide open, looking for every bit of information that we can find. We're not just blindly moving on ahead, but we're paying close attention to what the possibilities are and sharpening our pencil on the performance and all those sorts of things.
And one of the things that we've done is look for ways to delay either breaking the ground or pulling the trigger on the purchase so that it buys us more time, reduces the uncertainty, and puts the project when it's finally ready, you know, further out when hopefully we're back to where we want to be as an economy.
Yeah.
Dana, what's your opinion on what we can expect for precious metal premiums and supply the next 3 to 6 months? And why don't we price there too?
Oh, I didn't hear the last part.
Premium, supply, and price in the next 3 to 6 months.
Price. Okay. Well, we've gone through a real sudden burst of demand, which has strained the system for 3 different reasons. Number one, when the stock market fell and the gold price and silver price dropped, we had a lot of people running to us because they were scared and wanted to move their money and also take advantage of the dropping price. So that created a burst of activity, buying activity, 7 to 8 times our normal volume. And we have been going through record low volume for the last 2 years, so nobody was prepared for it. So that put premiums up for everything we could get our hands on, because the second phase of this is there have been closures of mints. The Canadian mint's been closed for 2 weeks. The 3 of the biggest refineries in Switzerland have closed for a couple of weeks at a minimum. South African mines have closed. So there's been a demand surge with a supply squeeze, and then there's logistical issues too, because plane flights are getting canceled. So there was a shipment coming from the Royal Canadian Mint that was scheduled that didn't make it to a distributor. There was another shipment of gold out of Switzerland that was coming to a Manhattan distributor that didn't get delivered. So that put premiums up. So literally on the street, where silver's $15, on paper it's been trading for $23, $24, and $25 in physical. Gold, for the same reason, is $16.50 an ounce, but it's actually selling for closer to $1,800 for the most popular items right now. Now that's going to pass. That's a bubble that'll pass. So I think that we'll see the premium increase that we see move back towards normal, but not until the mints really can resupply. In gold, it'll be easier because for 1 ounce of gold, it's 100 ounces of silver, 100 times the time and effort to make a 1 ounce silver coin as it does to make 1 ounce of gold. So silver will be behind the curve on that resupply. Gold will not be. I do think gold is going to go higher. It tends to climb a wall of worry, and the wall of worry is diminishing a bit right now. The volume of sales that we've gone through, which has been explosive, has really receded when the stock market found stability. Now, if the stock market takes a second tumble, which I think is still very possible, and I'm not good with the stock market, but I think the natural inclination is that we could get one more tumble there, we'll probably light up again to a degree. I do think gold is going to go higher over time as the debt continues to accumulate. So I think gold and silver are pretty safe bets to move higher. I've actually put some of my own money in the last 2 weeks into gold and silver ETFs to harness the price rebound. I got a little lucky there because you can buy gold and silver on paper through an ETF and not pay the premium that the physical has. When the physical premiums come back down, then I will convert that ETF money into physical money. But it's just the arbitrage is a little too high right now for my taste. So I think we'll get into a more normal situation. Probably take 2 or 3 months for that to happen, though.
No, that's awesome.
That's good. Thank you.
That's great advice. Here's a question that I have. So my opinion of 2008 and all the QEs taking the money supply from 800 billion to 4.5 trillion, my perspective on that, we didn't see a lot of Main Street inflation. I feel like it stayed up in the corporate finance, allowing Wall Street to purchase their own stocks back, increase price to earnings, fueled the stock market boom. But I didn't see the inflation that I expected with all of that money printing. Now that they're here on another round and they're pumping so much of it into Main Street, do you see a different outcome on the inflation, the real inflation with this round of the money creation? Or do you think it'll be similar to 2008? And maybe you disagree with my analysis of 2008. I'd love to hear your guys' thoughts on that.
Anton, do you have a comment? I'll say something.
Sure, go ahead.
Well, we have some deflationary forces in place right now. One of them is the drop in the oil price. That's a deflationary force, so that won't be inflationary in the short term. One thing that did happen over the last 10 years is we never got interest rates back up to 5% where they normally would be, right? So we've had cheap money. So the system has been flooded with money, and it has allowed a lot of stock buybacks, as you said, Michael. And we've also accumulated the biggest pile of debt we've ever had as well. So I think that there's an Achilles heel there. We'll see whether that gets triggered or not through defaults now. But as far as inflation goes, this could be a tipping point towards higher inflation in the future. I think the potential is there, but whether it happens is anyone's guess. I would have thought we would have had inflation by now too. That's what the Fed's been trying to push, but we still haven't gotten there. That doesn't mean it won't come. And, one of our friends, Peter Schiff, thinks we're going to go through a real inflationary period and the dollar is going to lose value. It's all about how strong or weak the dollar is relative to other currencies. So the dollar's been inordinately strong over the last 2 months because the U.S. remains the world's biggest economy and the safest place for people to put their money, not only if you're in the U.S., but from elsewhere. So money coming in from other countries for safety's sake, like we did back in 2009 and 10 when the Fed became the backstop of the whole world's economy. They're doing it again. The dollar has surged. If the dollar starts to weaken, though, that's where the rubber meets the road on inflation as well. And I think that's what you have to do is look at how strong or weak the dollar is relative to other currencies in the short term.
That's helpful.
For anyone who's interested, I just Googled while we were talking about this, what inflation actually was from 2008 till 2020. And it's actually 20% inflation. Divide that by the 12 years. It's about 1 2/3%. That's unhistorically low inflation for the last 50 years.
That's correct. That's entirely correct.
That's following all that huge QE that we had. So that's
amazing.
Curious.
Yeah, very curious. But your explanation makes a lot of sense, Dana.
Yeah, that's helpful.
Well, we'll see how it plays out.
Well, I think obviously whatever is measured as inflation, that 20% over the last 12 years is consumer inflation, right? Where we have seen a massive inflation is really on the asset side, whether it's stocks, whether it's real estate, where we all benefited from. So the question is are we going to see more of the same? Short term, I believe we will have more deflationary pressure, including asset prices. Again, I'm not an economist, and I wish I had a crystal ball, but just based on what I have seen over previous downturns, I think we will have a deflationary pressure across the board. Whether it lasts for 1 year or a year and a half to 2 years, who knows? But I think certainly short term, that's what's going to happen as things stabilize with that massive money that has been pushed into the system over the last 12 years. And now we go through a massive other round that eclipses everything we have seen so far. I believe we will see, as things stabilize, that we will have again an asset inflation. Are we going to see an inflation on the consumer side? I don't know, right? But I suspect that we will have another asset inflation once things settle down.
A couple of years of soft prices, asset prices coming down, buying opportunities before the next run up again is basically what you said.
Yes. Yeah, and again, also to Dana's point, right? The pressure on the U.S. dollar right now. I think the U.S. dollar obviously is a haven of safety, as it always has been during turmoils. So the question is that going to change as things settle down? And once the dollar is no longer the currency of choice, then it could well be that we'll see also an inflationary pressure there. Right?
Okay. No, that's helpful. Mike, not that you don't have anything to say on that, but we have another question here that I'd love to get your thoughts on. How are you working with tenants during this difficult time? This is a question we've had in different phrasings, but this is a big part of real estate investing world. There's we like to look at the numbers, but this is a human business like all of them.
So the banks that are really willing to help us are the ones that are getting government money. And so I kind of think that that's, why the local banks and, some of our CMBS lenders and interestingly enough, even, one of the things that we get a lot of opportunity with in the manufactured housing space is seller financing. And our seller financiers have been very, they haven't really been wanting to do any deferrals. Why would they? So anyway, I say all that to say that I think we have to be careful with our residents in general, just like our banks are being careful with us, because we can't, there's such a fine line between coming out the gate and just saying, hey, yeah, you know, we're offering help, and then having a program in place to where they can get the help if they need it. So early out the gate, we met with our team and we put some processes in place where if somebody genuinely needs help and asks for help, you know, how can we incentivize them to pay us? And so, you know, certain people are getting potentially some checks from the government. And so can we incentivize them to, I'll directly answer the question through what we're doing. Can we incentivize them to maybe pay 3 months up front and give them a 25% discount every month? This is almost like where, this is why I don't do the stock market, because I don't really know what percentage of my residents are going to pay me and not pay me, but I would rather have two things. I would rather have them pay something than pay nothing. And I would rather have a resident in that home throughout this period of time, because I don't really believe on the other side of it, it's going to be that easy to replace them. And so I don't know what works. I think this is a market conversation. I said this earlier, but we have a community in an area that has a huge employer that just laid a bunch of people off. And so that's going to really affect that community, because a big percentage of that community works for that company directly, or they work for a vendor that works for that company. So the way that I handle that community is completely different than I may handle a community in Tennessee that hasn't seen a whole lot of layoffs coming. So there's not a blanket answer for that, but I think the thing that we have to be cognizant of with our residents is not coming out and just saying, hey, we're going to give you forbearance and you can just pay whenever you want, because we have bills to pay too. We're walking such a fine line here. You know, we've got loans to pay, and they have to understand that. But then I heard Kenny McElroy say this, like, anything you can do to get a tenant to stay, if it means, you know, people that have their leases coming up, give them 2 months free to renew. Those are the kind of concepts that, if you believe on the backside of this in 2 months that there's going to be people lined up to come into your apartment complex or your retail center or your manufactured home community, then, you know, twist your residents' arms and be mean to them. But if you don't believe that people are going to be lined up wanting to rent from you, then I think we have to be really careful about the way that we communicate with them.
We're going to edit out that mean part later. But just
I'm not saying to be mean to them. I'm just saying, like, the way that we deal with them is the way we deal with each other across the board right now, the way we communicate up to our banks, the way we communicate to our lenders, the way we communicate to our investors, the way we communicate to our residents. There's a human element in all of this that I think we're all in it together. So I think we just have to walk the fine line of being able to pay our bills and not lose our properties, protect the asset while also protecting our resident.
I really appreciate that you keep mentioning that. And I think it's really key that we always be mindful that the whole world is actually pretty much in this together. You know, so that's a little different than a lot of things that many of us have gone through in the past.
Yeah. I'll say for our property management company, the assets that we manage, we went back and forth. And I know there's a lot of Main Street investors watching tonight. So, you know, there's the big picture, but, you know, how do you help your tenants? We were pretty proactive. I wasn't sure, you know, as this thing developed, you know, do you say something about the difficulty? Is that going to invite people asking for concessions and coming up with excuses of why they can't pay? And I decided, you know what, let's be proactive on this thing. We sent a letter out that said, hey, if you expect to have trouble, let us know. And I wanted them to let me know ahead of time, because if you're going to wait till the 10th of April and then say, hey, I'm having issues, well, that gets a different response than the tenants that called me the day they got the letter and said, hey, just so you know, I've lost my job and whatever. And like Mike said, you want them to pay something. I like to get dates and I like to get amounts. So I'm asking, what can you do? They want to sometimes say what they can't do. That's irrelevant. What can you do? And the other part of being proactive with it is I wanted to use my creative resources to help them. So we put out unemployment information. If they didn't know where to go, there's the website. Some of them that called me, it was like, they just hadn't put any effort into thinking of a solution. And with a couple minute dialogue, it's like, oh yeah, I could pay you $500. And then if you can wait 2 weeks until such and such happens, I'll get you the rest. So the other thing with this is how you steward human interaction during this time is going to stand out if you can be kind and thoughtful and loving to other people. Everybody's freaked out. And so if you have the emotional maturity to rise above that and think about somebody else's position, you will gain so much relational capital. And it may not feel like an investment to be kind to someone, to offer help. We're in some different circles as some of the other panelists are, and there's some preppers in some of our circles where, they have 2 years worth of this, that, including, guns and bullets and all this stuff, and they're battening down the hatches. And, thinking about a crisis, years ago was like, some of that makes sense. Now that we're in a crisis, it feels the exact opposite. I told our tenants, the rest of that letter to our tenants was, hey, if you need toilet paper, if you need food, if you need essentials, let us know. We're here for you. We had my maintenance guy delivering toilet paper to people who needed it. Instead of me being suspicious of my neighbors, anytime I see someone, hey, do you guys have what you need? Do you need food? Do you need essentials? Like, now's the time not to, there's the wisdom of making steps to optimize your situation for the days ahead. But that's completely different than this tight lock up emotional barricade that you put up that keeps people out and is suspicious of everyone. Now's the time, if you can open your heart, these are investments that don't cost you anything that will pay you back again and again in the years to come.
So true.
Yeah,
Excellent.
I'd like to add to that, if I may. When you help fix or solve your problems by helping your people solve their problems, the goodwill you generate and will enjoy in the future is priceless. And you have no idea how it will come back to you. It'll come back to you in many, many, many surprising ways that you never saw through referrals and, just good word of mouth. So I believe in that completely. Helping people is never the wrong thing to do.
Yeah,
So true.
I feel like you've made a career out of that, Dana.
It's been a lesson that's taken me time to learn, and having Jerry as one of my friends, the philosopher, who I didn't realize was such a good philosopher, it's only helped to make me a better man, as you have, Michael, too. So.
Well, guys, I think we're going to wrap up. I don't know if there's additional comments that anybody has. I'm going to pull up some contact information here for our panelists. But if there's a final comment that you guys want to go around and say, feel free. I think now's the time for that.
Thank you so much for having me. It's been wonderful to be part of the panel and be with you all. And happy to help anyone we can individually. Just email me. And good luck to everybody. Just use common sense. And if we all do the right thing, we'll come out of this much faster than if we don't. So this is a smart group. People know what to do. Everyone just needs to do it. Thank you very much for having me. I really appreciate it.
Thanks for being here. It meant a lot to us.
Thank you, Dana.
Yeah, so also would like to thank you for having me on, right, and be together with the whole group. I learned a lot just listening to everyone, from you, Michael, and Dana, Mike, and Jerry. So I appreciate that. Just kind of as a final comment from my side. Right, I do not want to come across negative, right? So I believe there are a lot of opportunities out there. And even though with my view, it will take longer than what most anticipate, there will be a lot of opportunities, and it's really important to be prepared. At the same time, and some of you who know me know that I have been watching out for opportunities, because I have been feeling that particularly on the multifamily side, the asset bubble has been going on for too long. Having said that, I still kind of want to warn everyone: please do not now act as a predator in these situations, because if you act as a predator now, people will remember how you behaved, right? So there will be an opportunity to get into opportunities for better prices, and there will be opportunities to help people out of their difficult situation. But it's not the right thing to behave in a predatory fashion, whether it's your tenants, whether it's your business partners, whether it's your investor. It doesn't really matter, because again, everyone right now suffers in one form or another, and there is a time for everything. And right now it's really time to be a good person to everyone around you.
Awesome.
Thank you, Anton, for
That's great advice.
those great words of wisdom. Really appreciate that.
I just want to, I appreciate you guys having me on. Anton, you've expanded my mind over the conversations today. And Dana, you might not know this, but I've listened to you 2 days in a row, and the outlook and where the gold markets are going and everything, just the wisdom that you have has been so empowering. So I learn as much anytime we're in conversations like this as what you give. But so here's the thing that I'll leave, and this has been kind of my mantra for the last 6 or 8 months. I think if you want to live more, you've got to give more. And I think this is kind of the theme right now. The whole world's in turmoil. It's turned upside down. And, people, I don't really think yet that people have even really digested what's coming and happening. And that's why I love having the conversations that, and Anton has brought up today, because I think this is so early and it's happened so fast. I don't think that we, as individuals, just in our personal lives, I don't think that emotionally we've even really begun to understand. I don't think our neighbors, I don't think our friends, I don't think our relatives have really begun to understand what we're even up against. We literally called, just back to the resident question, we called every single resident last month, just asking them how they're doing. And we didn't ask them if they need help, but we asked them how they're doing and what they see coming. And less than 20 residents out of 1,500 plus said they needed any kind of help. And
Amazing.
to me, that's an indicator that, it's a good thing and our collections are on track, but it's also an indicator with what we actually know and the way that the trend works and what's coming. We know that that's not true, and those numbers are going to escalate. And so having those conversations was encouraging as an operator, as an owner, as an investor. But at the same time, it opened my eyes to the fact that we haven't really digested or absorbed emotionally what's coming yet. And so I would just say that, for ourselves as individuals, just remain strong and stay focused. But we're also going to have to help a lot of other people, including our residents, it's communication. It comes back to that. So I appreciate communities like this because it keeps our head focused, and we get to hear, as Robert Kiyosaki always teaches us, you stand on the edge of the coin and you get to see both sides. That's never been more real to me than right now, because I get to see the tenant side, I get to see the landlord side. I'm on both sides of it. We get to see the human side. And I think we just need to keep all that in perspective.
Love it.
It's a really good word, Mike. Thanks so much.
Love it. Well, I'll share a couple things and then turn it over to Jerry for a closing. The one is, Mike, you mentioned it. I think now more than ever, community is important. If you are isolated, you only have your own resources to draw from. If you can connect in a community, foster relationships, this is not a zero-sum game. Somebody else doesn't have to lose. You can come up with creative solutions and problem solve with the creativity of your network and your community that could make the difference for you. So I encourage you to pursue community, pursue relationship. And the other thing, we're talking about what the outlook is. What's it going to be like in a year or two? Well, there's a Bible verse that says, brethren, consider it joy when you encounter various trials. So it's like, okay, so I'm going to go through something hard, but I'm supposed to be happy the whole way through it. Well, I remember as a young man reading that and like, okay, I guess I'll try that. And I remember a decade later when I finally, there was a hard time that was coming And my knee-jerk reaction was to be happy because I'd had the experience. It's one thing to read something and try to believe it. It's another thing to have the experience. And I think all of us watching this have, of going through something hard, not enjoying it in the moment, but on the other side, being so grateful and being able to look back and say, if that hadn't happened, this amazing thing in my life wouldn't be true. So as we're thinking about the future, I am 1,000% convinced that I'm going to look back in a year, 2 years, 5 years, and be grateful for this time and the challenges. So why would I wait until then to be encouraged? So you don't have to. That's the whole point. So just as you're looking into the future and trying to see how this thing plays out, know that you're going to be grateful for the challenges and step into some of that now.
So true, and such a great word. And I just want to encourage each one of us to take this time. You know, this is a fascinating time, and it's like a reset for the whole earth. It's kind of like pressing the restart on your computer when things get mangled up in there and stuff isn't behaving as it should. You reboot the computer. And in a lot of ways, that's what's happening to the whole world right now. And it's happening to all of us as individuals. And so as each one of us, as we're going through reassessing, just as Mike said, what are the A's, B's, and C's in our lives? What things really matter? And stewarding those things which with extra care and extra focus, maybe where in the past we thought, that'll be fine, it'll take care of itself, and we just pursued business. A lot of us guys are like that. But this has been a time to really reassess what really matters in life and to become better people ourselves, to become stronger in our hearts, in our spirits, in our minds, in every part of us, even physically to become stronger. And interestingly enough, you know, that whole thing about fear not is really quite a serious thing, because many of us have concerns now about our immune system, which is logical. And you know, one of the things that really destroys your immune system actually is fear. When we walk around in fear, our body actually releases cortisol in our bloodstream, which reduces our immunity to sickness and disease. So not only does fear incapacitate us when it comes to creative, intelligent thoughts, but it actually weakens our entire physical being. That's probably not where we want to be at this time.
So good.
Wise words. Okay, everyone. We know this thing was free, but the greatest investment you can make is with your time and your attention. So we appreciate everyone tuning in, sharing this connection with us. If there's questions, you have all the info, the contact details there. Take a picture of that, take a screenshot of that, reach out to any of the panelists. We brought on some great guys here. Reach out to them. If there's questions for us, let us know. I think there's going to be a short questionnaire. It's like 1 minute once I hit stop here. So if everyone could do that, that'd be great.
We'd love to hear from you, how this experience was for you this evening. Obviously, this is the first time we did this, and it was either this or nothing. So compared to nothing, I think it worked out really well. But we're so thankful for all of you who chose to join us this evening to spend this time together. And we would love to hear from you, and especially to our panelists. It's so good to see each one of you. You're all friends of ours, and it's just been an honor to have you together with us this evening and hear what you're thinking as you're processing all the things that all of us are processing. Thank you so much for joining us.
Yep. Thank you, guys.
Thank you, guys.
Thank you.
Everyone else. God bless.
Good night.